so
Okay,
many things
there we
happening.
go. There we go.
Right, so we're live. So you can hear me, Mark?
I can hear you.
Okay, great, great. Okay, so let's see if we got some people coming in. Guys, if you can hear me and you can hear Mark, just put a little yes in the comment box. I see we have Hakim, Randy, Lucy, Stephen, Yoni, Frank, Enda, Odie, Stephen again, Edwin, Phil, Nigel, Anthony. Oh, great. Okay, cool. We've got loads of people streaming in. All right, guys. So there's a bit of a delay between when we talk and when you guys can hear us. So just put a little yes in the comment box and tell us where you're coming from.
Hi, everybody.
Ah,
Hi, Pete. We've always got Pete checking in first. Pete from Wales. Renee, Edwin, Phil. Pete is always first in the class, and then Clyde.
really?
And
It's
yeah,
because of his name.
yeah,
He's got a good
Clyde's
name.
there. There's Clyde. They're right on cue. You guys are great. We got Bill, Charles, Darren, Frank. You guys are coming in so fast. I can't. Maurice, Zolt, Anthony, Johan. You guys are Michael, Elaine, Max, Andreas, John from Sydney. We've got Derek from the UK. Nigel, Manish, Girth, Murray, Randy, Mal. Hi, Graham. Hi, everybody. Jerry, Craig, Chris the Glider, Ashfaq, Rosario, John. Again, if you haven't already done so, please put your name and where you're from. I always get a kick of knowing where you guys are from. Hakeem says he can't hear anything. Maybe you just need to refresh, Hakeem. Karsten, Clyde says he loves the pound New Zealand. Been riding that puppy all week. I've been riding that for like 2 months now, Clyde. So I'm glad you're participating.
Okay,
Sophia says,
so
wow, from all over the world. Yeah, we've got people from literally every corner of the world here. David, Peter, Lorenzo from Spain, Jay, Fausto, Tron, Diane, Robert, Lucy from Singapore, Mike, South African, but living in the UK. You and Peter from South Africa living in the UK. So you have something in common there, Mike.
yeah, that's it.
Ralph from
Phil.
Switzerland, Bill from Massachusetts, Gil, Arizona. Wow, you guys are just coming in fast and furious. So we've got hundreds of people on this, so it should be a very exciting opportunity, I think, for all of us here. Terry, Andrew from Indonesia, Alan from Northern Ireland. So literally every corner of the planet, I think, is on the line with us. Vanka from Singapore. We've got Ben. Again, we got CJ from Southern California. I just moved from Southern California, CJ. Welcome. So if I didn't recognize you, I'm sorry. You guys are just coming in so fast and furious. Fahad from Canada. I've got Sanfried from Finland. So again, a very multinational representation here. So I think we'll give it another minute or so. Just give everybody a chance to check in. So if you need a cup of coffee or a break, we'll get kicked off in about 60 seconds or so.
Yeah, so it sounds like everyone can hear us and it's all coming through loud and clear, so that's great. Uh, I love it when we have technical issues on webinars and with all these platforms and technology, things always work perfectly all the time, don't they? So,
We got Klaus Dieter.
oh,
How are you,
Klaus, how
Klaus?
you doing,
Yeah,
Klaus?
yeah, one of our top students there has checked in. Bogdan, Rosario. We got Matt from New Zealand, Sean from Brisbane, Vincent from Vietnam. Michael says audio is 5 out of 5, so I guess it can't get much better than that.
Oh, that's good.
So, Pete, what do you want to do?
Yeah.
Wait another 30 seconds or so? We've still got people
Uh,
filing in here, so just give it
yeah.
another 30 seconds.
Okay. Ray from South Africa. Hi there, Ray. Where in South Africa are you from? Jill, is this the accelerator? Hey, Jill, you got people from the accelerator, from the master patent trader, people that have on the advisory. We have lots of different people, but this is not this presentation. What we're doing today is not available to the public, guys. This is only for people who are on one of the programs or have bought the book or done one of those things. So, all right, okay. How about we Lloyd from Melbourne? Awesome. Okay, why don't we get it kicked off then, Mark? Do you want me to get started?
Yeah, why not, Peter?
All right, okay, guys. Welcome to today's special session, which is entitled "How to Thrive in the Coming Market Chaos." And Mark and I have been talking about this for months now because there is a looming, I wouldn't say crisis coming ahead, something that's actually quite expected in the world of trading. Yet, very, very few people talk about it. I've actually never heard anyone talk about it. And something happened to me in the last couple of years, because if there is a way to lose money in Forex, I have done it up until about a couple of years ago. And whether it comes to brokers running away with your money, that's happened to me. I spent over $25,000 on courses for different Forex courses. In fact, actually, that $25,000 was one company, and it was within the space of 3 weeks. It was horrible. And no one talked about this. I actually was trading for a long time, and I was successful for a part, and then I failed, and it is exactly because I didn't know the information that's in this thing. Now, Mark does a fantastic job every week on the Master Pattern Trader session, on the boot camps, on every presentation that he does. He does a fantastic job of explaining what he does. However, there are a lot of nuances and there are a lot of things to it that you just can't cover over the course of 2 days or even a week. And what you're going to learn in today's session is going to be one of the most powerful things that is going to separate you from being to separate the professionals from the amateurs. And hopefully you agree with that in a little bit. In fact, I know that you're going to agree with it, because the stuff in here is what took me from where I was, from being an absolute loser, second guessing every single thing that I'm doing, to being someone who actually really understands cyclical forex and commodity trends now, where the coming market chaos doesn't take you by surprise, so that the coming market chaos doesn't completely decimate your account and get you tearing your hair out every single time. So if you guys would just switch off all your distractions, literally put away everything, and pay very, very special attention to the next hour, because the content in here is something that you've never heard before, no matter how long you've been with Mark. You may have heard bits and bobs in Master Pattern Trader sessions, but this is the first time we've already put it all together and taken what's inside of Mark's head when he goes about eliminating and picking specific trades during difficult market conditions, and putting it into a very, very succinct linear format that is easy to understand. So, Mark, why don't you go ahead and take it away? And guys, please, please pay attention.
Okay, Peter, before I get started, there are a couple people saying that they're having trouble with video and sound, or they're just seeing a black screen, etc. And I don't know if that's just a screen sharing thing or how to address that. So maybe there's a couple questions of that. I don't know if it's just an isolated thing or needs to be addressed.
Yeah, guys, if you can hear us and you can see the screen, please put a yes in the comment box so that we know that's working. So that we know it's not just an isolated problem. So, Bill, and guys, if you can't hear it at any point, just refresh your screen. It should be reconnecting. Okay, yeah. So it looks like it's a couple of isolated incidents. We'll look into that. So, Mark, why don't you go ahead and kick it off? Thank you so much, guys.
Okay, so again, I'm just going to switch into presentation mode here. Welcome again to this session of the Pattern Trader. My name is Mark Shawzin, of course, with Peter Visser. I've entitled this special member session, How to Thrive in the Coming Market Instability and Chaos. So here's what I want to do. I want you to put a big fat yes in the chat box. Let me know you're ready and you can hear me, which you've already done. And so why don't we just kick it off? So today you're going to learn how to cope with instability and chaotic market conditions using a very simple 7-step checklist and how I do this thing consistently. In today's agenda, I'm going to briefly cover why the market chaos could start within the next couple of weeks. You'll see real trade examples of what it looks like during market instability periods, and how to spot and capitalize on hidden market opportunities when it seems like it's an impossible trading environment. The one thing that you need to be able to do to thrive during stormy periods, and most people ignore this and they burn out their accounts very quickly because they do. I'm going to show you exact and actual trade examples of where I avoided specific minefields and trade traps. These setups look perfect on the surface, but in reality, they are traps. You'll learn to discover how to avoid these traps with this 7-step cheat sheet. So hopefully you're excited for today's content, and so I'm going to kick this off. So why this is important to you right now? The world is a little chaotic at the moment. We had special elections in the UK that sent the British pound versus the US dollar rocketing 300 pips in a couple of hours. We had a pivotal French runoff election results over the weekend, and some of the euro trades went up over 500 pips this week. We have the threat of war with North Korea and Syria looming, and this is making investors very nervous. And when investors get nervous, they stop investing. And the summer months are always a good chance of being range bound and choppy. So when people go to the sidelines, people go on holiday, the volatility slows up, the ranges slow up, and this is where inexperienced traders get literally chewed up. You can be one of those who thrives during this period or withers and moves on to the next shiny object. So this is an example of what the euro looked like last summer, where we had a powerful move down after the Brexit announcement, and thereafter, for the whole summer, the entire summer's range was traded within one daily range of Brexit over the course of 4 months. And can really chew up your account during periods of instability and sideways choppy range-bound behavior. This is an example of the pound versus US dollar in the summer of 2016. And you can see following the Brexit, we literally traded just 1/3 of the daily range of Brexit for an entire summer. Just went back and forth in literally 100 pip range for 4 months. Now, this is an environment where A, you tear your hair out, and B, you chew up your account. This is an example of the dollar versus yen again last summer, and you can see following Brexit, the market action was contained just in a couple hundred pips back and forth in very uncertain conditions. So what I tend to do is just hone in on the very high probability trades. There's always something that's going on, and in this period of time, you have to be very, very selective. So again, usually most mainstream investment instruments go into a choppy environment, but there are always some outliers that you can hone in on. And this is an example of several trades I picked out during that period where most of the other pairs were range bound. So you can see this was the pound versus yen. I spotted some double top and key reversals and was able to take out close to 800 pips on the downside. And then focusing on other opportunities that were offered within that period of time. This was a recent double bottom right here where we got in at the very low and took a 652 pip profit. In fact, I'm just going to do a little sidestep here and share with you the email that went out just to show you the format of the email. So every night, my members, getting these trades are alerted at 5 p.m. Eastern time, and this is exactly what these emails look like. So typically, I include some kind of trading overview, and this was right before this trade that I just showed you, where I made 652 pips in the pound versus yen. And on that particular day, I had some observations, and I said, I believe you'll see the next major trends continue for the next several months. And I said the euro is going to go lower, and it went lower for 10 straight days after this email. Gold went $100 lower. The yen went much lower, went from 100 to 118, and the stock market went higher, following these observations. In my email, I also show you how to manage trades, how to trail with stop loss and take profit. And here exactly was the trade I just shared with you, how to manage this pound yen and get in during sideways market conditions. We got in on a buy stop at 131.75 and eventually extracted 652 pips out of a trade just like that in an environment which ordinarily was very, very sideways. So what else is going to happen? Perhaps every single thing this summer is fine and dandy. In the summer of 2015, I had a record couple of months. However, this was an outlier. In all my experience in trading FX, usually, June through September can be the death knell, where it goes very quiet, where it gets very choppy, where the ranges, usually have a range in the euro of over 100 pips. Sometimes it's less than 45 pips. And this is, again, very difficult to trade. You'd be naive to think that market conditions like this are going to remain. So you need to adjust your trading to make the most out of the market instability that is destined to unfold. So the perfect way to thrive the chaos is, just as an example, every single year, once a year, millions of salmon swim upstream from the ocean into the fresh water. The experienced bears, like the top picture, ignore tens of thousands of fish. He simply sits and waits for the salmon to come to the shallow water and then easily picks it up. So selectivity is the keys there. The younger, less experienced bears try and go after every single fish they see. Soon they get exhausted and burned out, and they're left with the scraps. So hopefully you can see the metaphor there. So this is a system which, doesn't only show you which trades to take, but which trades to avoid. So avoiding specific trades and setups is the hallmark of a professional traders. Newbies jump into every single opportunities, and pros wait and then select their prey carefully. And this is so much more important when we go into these choppy, sideways, unstable market conditions that I believe is going to start happening very soon. So in a moment, I'm going to reveal a simple 7-step cheat sheet that I use that'll help you to avoid trades like a pro. So first, let's go through some example trades that I decided not to take in the last couple months. But before I do that, I thought I'd share with you just a couple of trades that I've taken in the last couple of weeks. And I'm not trying to boast, but I'm extremely proud about the outcome. I think it also very much validates my price action, price pattern trading methodology. We are usually in before the events are known, and this is a prime example where for several weeks I got in like trades like the pound versus New Zealand trade all the way back in March 6th. I started getting in at 170.509 and I got out at 900 pips higher, so that's not a typo. And for you guys who know and been following me, you've been seeing these trades all along. So just on over the course of a short period of time on my daily trades, you could have extracted 1,500 pips, and in the weekly trades another 2,300. So almost 4,000 pips just in the last couple of weeks. And you can see there are not many trades on this board. So most people are trading 10 or 15 times a day. I maybe took 10 or 15 trades over the course of the last 2 or 3 weeks, and I'm up 4,000 pips. So you kind of have to ask yourself what you're looking to accomplish, what your objectives are in the market. Are you looking for the bump, the rush, the action, or are you willing to be patient and disciplined? And again, the watchword, going into, I think, the next trading environment is if you're not patient and disciplined, you're going to be cut up. So let me give you an example of trades that I didn't take. So why didn't I short this Australian dollar, New Zealand dollar trading pair? So again, we're looking at the Australian dollar, New Zealand dollar, and right here we see what appears to be a double top right here. This typically is a price pattern that I would jump in on the short side. So why didn't I take this trade? In fact, I was on a webinar right at this juncture where the fellow asked, isn't this a double top? And, shouldn't I take this trade short? And I said, by and large, ordinarily you do well to do that. But I felt that this was a looming trap. Now, why did I feel that? Because, again, this is why I look at charts from a bigger perspective. I look at least the daily or the weekly so that I can see some history and put things in perspective. When we look at short-term charts, 5, 10, 15-minute charts, we really don't know the cards that we're holding. A move could, a chart and a price could go anywhere in the next 10 or 15 minutes. And that's why, to me, it's so important to look at the bigger time frames to see what's going on here. And again, what I thought was driving this market was really a function of what occurred before that. So this, as I've shared with you guys many times, is one of my favorite bear patterns. This is called a descending wedge triangle, which is denoted by a sloping downtrend line that connects the highs and a horizontal line that connects the lows. Now, typically, we would expect a triangle like this to be bearish. But in this case, what happened was it broke out the other side. And I'm going to show you an example of a trade that I'm in right now that is exhibiting this very behavior. So we can see now the benefit, when this broke out, that, prices sustained itself to the upside. But, again, I ask myself, what is the primary driver in the market? We can shoot at so many things. We see so many setups, and the question is why, when is a double top not a double top? When is it not a valid sales signal? And, the reason why is that I thought that this breakout from what should have been a bear position, is setting up for what will be a long-term move to the upside in Australian dollar, New Zealand dollar. And that's why I thought, and I told this fellow, I said, you may be able to get 80 or 100 pips on the downside, but eventually you'll get into a trap and it's going to shoot out the other way. And this is what actually ensued in the market, where we can see that this turned out to be, a false trap, where we saw this double top right here. Looks ordinarily like a good thing. We had, a lot of volatility here, a lot of volatility there. Very difficult to actually capitalize on that. We had one day that just shot there, but then it was right back in your face. And now I'm actually long Australian dollar, New Zealand dollar in the primary wave of where this thing was indicated by virtue of this continuation pattern. So sometimes patterns are reversal patterns, and sometimes they're continuation. And I made the observation that this was a continuation in a long-term up market. And so I'm actually long Australian dollar, New Zealand dollar at present, on my daily signals sent out to members on, my daily list. And we're up about 100 pips in that trade while we speak. So this is an example of a trade that I'm in right now, where again, we notice, what happened on a breakout of a descending wedge triangle that didn't go true to form. So this is the same thing. So again, I was on a recent webinar and the guy says, isn't this a descending wedge? Shouldn't we jump on this on the short side? And I said, ordinarily I would, but I felt that inherently this was again a trap. And I felt this way for 7 reasons. So here again is this descending wedge. So ordinarily, and I think, I was talking to the fellow right around here. So, again, it was setting up, it was looking like a descending pattern with lower highs. And typically this is something that I would look to jump in on the downside, because this typically indicates a reversal pattern. So why didn't I take this short? Again, I ask myself, the question all the time, what is the main trend, or what is the pattern that is guiding or underlying a market? And way back here, and this is where I jumped on the 652 pip winner I just shared with you, I determined that we made an important double W bottom. It's kind of an unconventional bottom, but there you have it, where you had these multiple lows here, and this is where I caught, this was my entry right here, 131.75, and I took it for a nice 652 pip ride. So again, by virtue of this double bottom, this tells me, with the word bottom in it, that over time, this pair is going to do what? It's going to trade higher, because if a market has made a bottom, again, the lingo suggests that there's only one way for this thing to go. So while we put on this pattern that was inherently looking bearish, I knew that this was probably a trap. I also watch how markets act at certain support zones. So right here, when the fellow asked me, I said that you probably could get 100 or 200 pips out of this, but it was probably a very risky premise, because it was likely to come right back in your face. And this is what the British pound looks like today, where again, just like the Australian dollar, New Zealand dollar, we were faced with this descending wedge, and the question whether this was a bear pattern, which it normally is, or is it a continuation pattern in the bull market? And again, by virtue of this double bottom way back here, I was positing all the way back here that eventually this thing would find a way to go higher. I didn't know how it was going to do it, but it was going to do it. And then when it broke out here, this was my first alert. And then the other day when we had this huge key reversal, I got long right here for those on my daily email list, and now we're holding a trade with in excess of 100 pips profit. And just like odd New Zealand, I think you're looking at a northerly price direction in pound yen. But again, this is an example of why I didn't take this trade. And this is why, it's probably more important why you don't take trades than the trades you do take. And again, we're going into an environment where now hyper selectivity and actually avoiding trading pitfalls and traps like this are going to be more important than ever. Here is a last example, and why isn't this a good short trade? And again, I have to look at what is the major driver in this market, and you can't really see the whole thing, but we had this important rectangle bottom, and then you can see this large key reversal here. And again, a key reversal is nothing more than observing how prices close relative to the high and low. So when we get a daily bar and we close much closer to the high than the low, especially on a size range like we had here, where it was probably 500-600 pips in one daily range. So the bigger the range, the more confidence that signal is going to give us, the more robust. And again, when I see these key reversals, it's the same thing as the market pointing in the direction it wants to go. So here we had, why isn't this a double top? And for a while it was, but now here was another trap right here. So ordinarily I look for key reversals to get short. So, here was a nice key reversal. We could have gotten short and taken for a nice trade. But at some point, these key reversals represent a trap. And I kind of refer to these kind of things as getting short in the hole because, you have no elastic band effect here. Typically, markets don't go straight down. They usually kind of go down, then they kind of break up, and then they go down, and then they break up. And just like an elastic band, you want to catch the market when energy is ready to be stored and then released. And you don't want to get, caught all the way down here where there's no release of energy. It's just been going straight down for a couple of weeks, and now you're short right in this hole. The other thing, and I've kind of confused this whole thing, is that we had a key reversal the day before where the market made a new low and closed on the high. And as you guys know, I've learned to respect those at certain junctures. So again, I felt that while this on the surface was looking like a trade you should jump on the short side, I had a feeling it was a trap. And that's actually why I went long pound yen when I did, because I thought these yen pairs are going to go higher. And this is an example of what eventually happened. In fact, in my weekly video report last week, if you guys remember, I said that there was a good chance that dollar yen was going to go back to 111, even though it looked horrible at the time I was making the report. And here we are at 111 on dollar yen today. So is it starting to click with you just how important it is to avoid trades? Probably more important to avoid certain trades than to act on certain trades. So please put a yes in the comment section if you get this. The next part of today's session, we're going to reveal exactly the 7-step cheat sheet you need in order to avoid these trades. So again, put a yes in the comments section if you agree that avoiding trades is probably as important as making good trades, especially in bad market environments.
Yeah, so we have loads of yeses coming in. I mean, I can't even read them all. We've got Frank, yes. Carol, yes. Frixo, yes. Fabrizio, yes. Manish, yes. Phil, yes. Michael, yes. Patrick, yes. John, Johan, yes. George, yes. Chris says, yes. Can't wait for you to tell me why. um, Pete says, yes, of course, trade for a couple of years and you'll certainly find out. Robert, yes. Ihani, yes. So, yeah, I mean, we have about a billion yeses in there. Okay, so people are on board, so that's good.
Okay, good. So I know I'm going in the right direction here. So now let me pull back the curtain and reveal my 7-step cheat sheet on how you can avoid these traps in the market. So the first thing I do, I have about 30 different instruments on my broker platform. And every day my job really is to eliminate trades. I'm not looking so much for opportunities as, looking to eliminate, bad trades. So at the end of the day, I'm just trying to find 1 or 2 high probability setups. And as you guys know, well, for the people who on my daily list know that there are several days where I just say no trades. There's no trades that fit my my risk reward criteria. So I look at every possible instrument on, 30 instruments, 25 FX pairs, gold, oil, some global stock indexes, and I'm looking for the very best opportunities, but more more than not, I'm looking to eliminate opportunities and hone in and focus on the best opportunities. So I look at every possible chart instrument again and again. I eliminate the obvious no-go pairs. This gets rid of 12 of them, pairs that are, in a trading range or have no insurance day bar or no pattern or no guidance. I assess the quality of the bars on the remaining sheets, and I'm going to talk a little bit about that in a minute, about the quality of the bars. This gets rid of about another 4. So there are about, there's just a handful of remaining candidates after that. And then of the remaining candidates, I basically do a visualization process. I call this the positive future pace, where I draw in my mind a winning line. So if I'm looking to go long, I actually try and draw in my mind what that chart would look like. Do I see the possibility of it going in the direction that I'm anticipating? And then I actually draw another line, which then shows me, the other side. If I'm wrong, can I see that this actually is going to go against me? So I do the same thing on the weekly and the monthly charts. I start off with the daily, and then I do the same thing on the weekly and the monthly. So I know this sounds a little kind of like Chinese to you, but let me show you what I mean. So this is an example of the euro versus New Zealand dollar, pretty exotic pair. And you can see that, based on my analysis here, that I assessed that this market was coming down, but then there were 2 price points that met, formed this double bottom, and now we had actually pierced this neckline, which effectively confirmed this double bottom, which is simply a price pattern that indicates a reversal in the market, a market that was traversing lower and now looking to go higher. So again, these are just simply reversal patterns. So when we got here was my double bottom. And then, as you guys know, I don't just, shoot off something arbitrarily. I look for my, insurance day bars. Here was an inside day bar. And then here was a huge key reversal. And like I said, the bigger the bar, the more intense and robust that signal is likely to be. You can see we closed right at the high of the day on this key reversal bar within the context of this double bottom. So again, when I see a double bottom, this tells me that over time, and I use the word over time, very poignantly, because the market can go this way, it can give you a couple of head fakes, and then it's going to go. And you can see that the Euro New Zealand is shooting up this week, but it was all baked in the cake in the December timeframe. So here we are 4 months later, after this double bottom was formed, and the Euro New Zealand is shooting much higher. So again, this is why, to my mind, price patterns and price action are everything you need to know. You don't need to know, about the outcome of the French elections, or, what Theresa May is going to do, or what Donald Trump's going to say tomorrow. Those are just for retail traders who are looking to take 10 or 15 pips out of the market. As I showed you, I take 900 pips out of an individual trade. And the only way you can do that is by seeing these setups, occur weeks and months before. So again, this is an example of a double bottom with my key reversal, and I'm saying to myself, okay, what does this look like? Can I actually see this market going higher? I have to be able to visualize it. And similarly, I try and draw a chart, going the other way. And it didn't kind of make sense to me that this is going to go the other way once it cracked this neckline. So again, I use this confirmation within my mind. Once I set up the trade, I then say, okay, what does this look like? And can I visualize this thing going forward? And here I do it again on the weekly and on the monthly. And all these junctures, I said, look, the sales were behind me, and it looked like we had formed some very important patterns here in the Euro New Zealand, suggesting it was going to go higher. And these charts were actually drawn up in the January timeframe here, and we fast forward to April, and you can see that this market is just shooting up while we're talking. So ultimately, I have to, assess how I feel about the position. The chart analysis shows that it has a good probability of going up. The quality of the bars support it. So when I mean the quality of the bars, so you can see on some of those big key reversals when I went long that pound yen, or when I went long that Euro New Zealand dollar trade, the bars, the actual range, so there were several hundred pips that those bars had traversed in one day. So the bigger the bar, the more indicative that signal is going to be. And that's what I call the quality of the bar. And then I also have to eliminate, that I cannot see it going against me, in my visualization on the daily, weekly, or monthly charts. And then I pick this trade over all others for these reasons. And of course, this is what ultimately happened in the Euro New Zealand. And I took out a nice 300 pip trade out of that double bottom key reversal price action. So again, this is just a repeat, a little reinforcement of my 7-step cheat sheet. I look at every possible instrument over and over again. I eliminate the obvious no-go pairs, pairs that are ranging that have, very little. So I have to have a minimum of at least 3-to-1 risk reward on my trades. So I have to visualize in my mind, if I'm going to take a 50 pip risk, I have to see that trade has the potential of going up 150 pips in the next couple of days, or I'm just not going to get involved. And then I assess the quality of the bar. So sometimes something looks like something to me, but if it's a very small reversal or there's not a lot of confidence there, I just just eliminate that. And so I'm just looking for 1 or 2 trades out of my 30 possible trades every day. And some trades, there just are none that conform to my risk reward criteria. And again, eliminating trades, sitting on the sidelines, sitting on your hands, avoiding certain trades is just as important as trading. And going into these summer months, this is going to be, I think, even much more important. And I can't reinforce that message enough. This is where people get crucified in this period of time. Again, I also try and do a visualization process. Drawing the winning line or drawing the negative line, seeing if this thing can actually go against what I'm seeing, and then do the same on the weekly and monthly chart, and then assess how I feel about the trade after I've done all of this. So, let's kind of go into the live session. I don't know, Peter, if we should take a couple questions at this juncture, or I can just proceed into the live.
Um, yeah, so I'll go. We'll do questions at the end. I think we've got a few that's come in, guys. So just mark it as a question. If you guys have put a comment in as a question, mark it as a question, then it's easier for us to see because it goes into a separate column. So, for example, Bernie, I'm going to mark you as a question. Um, yeah, go into the live markets, Mark, and then we'll answer some questions afterwards, and then we can talk about a couple of other announcements and things that we want to talk about.
Okay, well, here's just a recap of the last couple of weeks. Has been very robust. And again, you can see the output of this kind of analysis. So on this chart, I'm looking at XAU USD. Now I realize some people in the United States can't trade this, but I'm using this primarily just as an exercise of how I visualize the market. So it's not whether you're going to trade this or not. So at some point, I've been analyzing, markets trade in channels, and you can see that this trade is, kind of put on a very distinctive and symmetrical channel. You can see that these lines are probably an equidistance apart. And we can also see that at very telling points along this line, there were some very nice opportunities. This was an opportunity where we had a key reversal. Again, a key reversal is simply an observation of how prices close relative to the high and low. Again, that's why I wait to the close. The close tells me who won the day. These are all daily bars. It represents one day in time. So you'll note it's not a 15-minute chart. It's not a 30-minute chart. It's not a 5-minute chart. I look at the longer term charts to see what's going on longer term. You'll also notice this is a naked chart because there are no indicators on here. There's no stochastics. There's no Fibonacci. There's no MACD. There's no moving average. So I just use clean price charts. And I look at the core trend or pattern that tells me where the next important move is going to come. And when a market closes closer to the low than the high, it kind of, to me, points in the direction it wants to go. It's kind of like a cheat sheet. You don't have an MIT, economics degree to trade these markets. You don't have to have inside information from the Bank of Japan. The markets actually tell you where they want to go. You just have to surrender to the will of the market. And this is what I do every day. So at this juncture, I basically entered a trade here to sell at 1246. I went short. And then I actually had another signal along the way Here's another key reversal where the market made a new high, close on the low. So while I still had one open position on, I added to my position here because I was pretty confident what I was looking at. And so I got a second position short at 12.23. And then when I saw this reversal right here, I basically got out of both trades, one at 12.06 and one at 12.08. And collectively on those two trades, I made 550 pips. I'm so successful in gold. I'm actually, I shouldn't say this, but I'm going to announce a gold program in the next couple of weeks. But anyhow, so I made 550 pips there. And now recently I saw the same thing occurring at the apex of this trend line where we had this key reversal. The market made a new high, closed on the low, telling me that the market was going to head down. And it was on this particular day where we had this big key reversal. The market made a new high, closed on the low. I actually got short right under the low there at about 1261. And I'm currently short. You can see the markets are marketing time. I'm not making much money here. And now you have this inside day bar where you can see the market action is contained. The daily high and low is contained within the previous thing. And I also coined this an insurance day bar along with my key reversal. And tonight, I may just add a second position under the low here in my expectation that we're going to come back to this trend line at around the 1230. So collectively, I could make another 500 pips on something like that. But again, I try and visualize, the process. I try and see, okay, based here, can I see the market kind of shooting up from here? And it possibly can. It's basically along this ascending line here. It's hugging this ascending line. So again, any puncture of the upside here is going to alert me to get out. And any puncture below here is going to probably give me a trade to go lower. So again, I look at a collection of these different bars, and then I do my visualization process to see what's going on. I can peel back to the weekly, and we can see that the same thing going on here. So you can see we've got a bit of a head and shoulders price pattern here, represented by the left shoulder, the head, potentially the right shoulder. And so we're at the apex. We also are in this trend line here. We've got kind of an ascending channel, so it's a very narrow thing. So again, I can see us coming back to this channel here. So this is, again, what I do on the daily, weekly, and monthly. So I'm going to refer to the monthly, and you can see that, again, we look like we're failing here, and looks like we could open an important move lower. So on the monthly, I look at what's the important pattern that's driving this trade. And all the way up here, we kind of had a double top, kind of descending wedge, which is an extremely bearish price pattern. And so this is just the sleight of hand. This is just the distraction. But everything is being driven by this pattern up here. So eventually, I do believe we're going to see something like this. But then I try and draw it out of my mind. I try and picture it both ways, and I will jump on it no matter which way this thing indicates it wants to go. So that's kind of just a brief insight into my process. And now maybe I'll just turn it over to you, Peter, to answer some of these questions.
Yeah, sure. Okay. Let me see if I can have a look at a couple. So I just want to answer a couple of questions, and I want to go ahead, and then we can answer some more at the end. Hugh had a good question here. He said, you haven't mentioned anything about the context of the market. So, in other words, not doing stuff in a vacuum. In your early teachings, you did as part of drawing sort of the bullseye that goes to the middle. And I just quickly want to address this, and then you can address it, Mark. But basically, Hugh, so that entire process of picking a trade, that 5-step process that Mark uses, you still use that. But this 7-step cheat sheet happens after that, because a lot of trades could still look like a trap. And so you do the process of elimination where you go through the bullseye and you go through the 5 steps, the historical precedent, the market, the condition of the market, the inside day bar, the pattern, all that kind of stuff. And and you look at that, and then you go through these 7 steps, because you're probably going to come up with a few currencies or a few instruments like oil or gold, that could give you kind of a trap. So
So
I just thought I'd address
let me
that
give
real
you an
quick.
example, Hugh, of another trap, and this is a minefield that I actually avoided on this particular trade. So when I got short here, I kind of, you know, at this juncture, it looked like a head and shoulders. So when I got short right here, this was tracing out a head and shoulders, and I was getting real excited that we are on the cusp of a major thing. And then we got right here, and we had this key reversal. Now I've learned to respect these key reversals. And then I started noticing that that key reversal, happened along a certain juncture. Also consistent with that key reversal, I look at the price action. So, usually in a down market, prices should follow. They should, if this is a head and shoulders, we should keep going. Price action should keep confirming that. So when I first saw this key reversal, I started unloading some of my core positions. Remember, I had 2 positions. I got on one here and then the second one here. So when I got here and I saw this key reversal, I automatically unloaded the first one at like 1208. And then when this never followed through to the downside and started exploding, I just got rid of the other one. So it's a combination of looking both at the price action and the price pattern. So while this price pattern, this head and shoulders, was suggesting that I should, go for a long ride lower on this thing, and I was all positioned in my mind for that, I then look at the price action to tell me when I should, if I should be getting out. And when I see a key reversal like this, I've learned to respect it. You can see that along this trading line again, and I took a big trade right here. I got long right here at 1258 and got out right here on this key reversal at 1287 and took out, I don't know, 210 pips out on that, or 310 or whatever that translated to, out of that trade, because I noticed all these key reversals along this line. And then this in my mind should have then, now once it shot up out of this thing should have, kept going. But then I saw this key reversal and I was alerted on the other side. So this is a constant process of seeing what the market is throwing at you and then seeing where the minefields, because the market does a lot of sleight of hand. It's like a magician. It's kind of, he's getting your eye to, follow you one thing while he's pulling a rabbit out of the hat with the left hand. So that's what the market does. It's a bit of a sleight of hand. It tries to throw you off. And so, I'm just experienced enough now to know where all the minefields and the traps are, or not all of them, but most of the important ones, to keep you out of a lot of trouble along the way. So,
Okay.
Peter, do you want to take them? Sorry for that. It was a long-winded
Yes.
answer.
Yeah. No. 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 Not at all. No. It was really interesting. I was actually so captivated. I forgot I was muted. All right. Okay. So I'm going to go ahead and I'm just going to share my screen here. And then we can go in and talk a little bit about. Uh, we can then take some more questions or whatever. But basically, what we want to do is I just want to talk a little bit about the Pattern Trader Elite, because I want to ask you guys a couple of questions. First of all, did you guys get value from this? Put a yes in the comment box if you did. I mean, this is just so different from what I've ever heard before. Like I've heard so many things in the forex world, and it's very, very rare for someone to kind of put what's in their mind into slides like this so that I can see it. Because I said to Mark like a year ago or so, I said to him, listen, I'm following your trades and stuff, and it's all good, but there's like sometimes you just have these little nuances and you have these little things that you've got that I don't quite understand. Like I don't like, why did you take this? Why didn't you take that? And 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 this method, this little 7-step cheat sheet, has really, really helped me with that. But it's just kind of shown me how much left I've got to learn. So put a yes in the comment box if you're if you're on board with that and that makes sense. So I just wanted to thank Mark so much for putting that stuff out there. Um, And also, do you understand that this takes a while to master? That's the other thing, because a lot of people in this industry talk about the quick buck. They talk about the fast action. Oh, you're going to make 100% a month and whatever. But hopefully, you guys understand that this actually takes a while to master. This actually takes some time. You can't just do this overnight. You can't just turn up, listen to stuff. You actually have to go out and do it, and you have to replicate it, and you have to be there in order to learn this all the time. And also, hopefully, you can see that mastering this skill is the path to financial freedom, because when you get to a stage where you can read a chart like a map, your entire world changes. And I'm actually still on the learning curve, but the thing is, I'm actually like an incredibly slow learner when it comes to this stuff, and I'm a very emotional when it comes to money. There's a lot of traders out there that are a lot better than me, but Mark has really shown me what it takes, and helped me to understand that these different phases of the market, because you have the great phases and then you've got the market chaos, and you need to know how to be able to trade that. And so hopefully you guys understand that. So with that, I want to introduce the Pattern Trader Elite. Now, basically, you guys know about the Master Pattern Trader. So the Pattern Trader Elite is includes the Master Pattern Trader. So some of you are already members. So every single week you get a 2-hour session with Mark where he goes through this stuff in detail, and you guys know how valuable that is. He spends 1 to 2 hours every single Friday on that. I always catch the replays because I've got stuff on then. And you get recordings of all the Master Pattern Trader sessions as well from the past, so you can literally look. I think it's over 100 hours, more than 100, like 200 hours of Mark just analyzing the markets in there, and it's easily worth more than the $997 per year price tag that it has now, because I literally spent over $25,000 on forex courses and I never got anything nearly as good as that. Now today you're going to be given the chance to get a lifetime subscription to the Master Pattern Trader as a free bonus for joining the Elite program, and we'll talk about that in a little bit. The other one is the Pattern Trader Accelerator. Okay, again, some of you are already members, and some of you have been getting these weekly trades, and some of you are making a lot of profit. Okay, so every single week you get in-depth email with long-term currency and commodity trades, and some of you love it. I mean, if you love it, put a little yes in the comment box. Because I love these weekly trades. They've produced like 2,500 pips in the last 6 weeks or whatever, and you get to copy and profit from Mark's analysis. It's easily worth more than the $1,200 per year price tag it has now. Some of you might have got in on the bundle where you get the Master Pattern Trader and the Pattern Trader Accelerator together for $1,000 a year. Like that's Mark sometimes runs a special bundle offer, but still, it's easily worth more than that. Now today I'm going to be giving you the chance to get a lifetime subscription to the Pattern Trader Accelerator as well as a free bonus. So when I say lifetime, I mean lifetime, for as long as Mark is breathing, and that's going to be at least another 3 years, right, Mark?
Let's hope.
No, so it's going to be at least another 20 years. He's in great health. Um, but so lifetime Pattern Trader Accelerator, lifetime Master Pattern Trader Accelerator as a free bonus to the Pattern Trader Elite, and you get all of that once you become an Elite member. However, before I explain what the Elite program is, I have to be clear: this might not be for you. I don't want to be disingenuous that this is an easy program. It's intense. It's difficult. It takes a lot of commitment, but it accelerates your learning like nothing else. In fact, we have some elite members on here today. I know Klaus is on. I saw him amongst the sea of names that came in there. Okay, so the first thing, you might not be dedicated enough, and this is not for me insulting you or anything like that. It's just sometimes it's really hard to show up every single day and go ahead and enter trades. So in order to be a member of the Pattern Trader Elite, you need to commit, work hard, and get your hands dirty, because this isn't some kind of trade from your laptop on the beach stuff like some of the other form of wealth building. This requires hard work and dedication to hone a skill, because eventually it could be some trade from your laptop on the beach stuff, but really at the start you need to pay attention, and you really need to get involved in those nuances to start seeing things how Mark sees it. And there's only one way to do it, and we're going to talk about it in a minute. If you have anything other than complete commitment, then this isn't right for you. Then stay with what you're doing, and take it easy, and learn over a longer period of time. Okay. You might not be able to afford it. Okay, so I'm not going to joke around with you. This is pretty expensive. It's the costliest package that we've ever sold, but in reality, is actually not expensive at all. Because if you compare it to what I've paid and what you actually get out of it, and I mean, compared to university tuition, it's actually a steal. I need to change this slide because you know what? It's not expensive, but some people might not be able to afford it. If you compare it to the likes of $30,000 college and university fees, where you get yourself into a huge amount of debts to
Peter,
acquire a.
Peter, before you go on, some people are seeing what I'm not seeing your screen, and some
Oh,
people are
you're not
saying
seeing it?
yeah, and some people are
Are you
saying that
guys?
yeah, it's just stuck on your picture. So, and some people are
Oh,
concurring with
right.
that. I don't know if it was just my system or just the way it works, but okay. So now you're seeing me, or I'm seeing you,
Sorry
and
about that.
no, and now okay, now
It's all coming through.
now I can yes.
Okay,
Okay,
nice. Let me go back
no,
to the. All right, you can see it.
yeah, but you're on the 7-step cheat sheet.
Okay.
Okay, you're on slide number 2. Okay,
All right.
so
Okay. All right, sorry about that, guys. Now, compared to university and compared to working 40 hours a week for 40 years, which is what college gives you and university gives you, compared to that, the pattern trader elite is actually an absolute bargain. So you'll actually acquire a timeless skill set that will allow you to successfully trade and make long-term consistent profits in the markets year in and year out. But to join this premium level membership is going to cost you a sizable fee, especially because you're getting a bunch of cool bonuses with it as well, and you may not be able to afford it. I just want to prepare you for that. You might moan too much. Okay, one thing Mark hates with a vengeance are moaners and blamers. Okay, so people are constantly playing the victim card and whinge. It's probably not in this crowd actually, because you guys are like just you guys are really really cool, because we're actually only talking to people who have, who are either master patent trader members or patent trader accelerator members already, or advisory members, or bought Mark's book. So you guys are probably not in this category, but I just will have to go through it. Mark has a moral responsibility to ensure that all the patent trader elite members grow into self-reliant, ultra smart traders. So this isn't something that relying on Mark isn't something we want you guys to do forever, okay? Because one day Mark's going to go away. We said 20 years, didn't we, Mark? And you're going to have to be able to do this yourself. So if you're a nightmare to be around and just want to gripe, then this isn't for you. And again, this probably doesn't apply to most people on this on this webinar right now. You might not be mentally tough enough. Okay, so seriously ask yourself a question. Trading requires ironclad balls. You need to be able to execute. That's because you may have to lose money for a while. No trader in the world can guarantee consistent short-term profits. It's just not the case in the trading world. It's the way that Wall Street works. It's the way that everything works. And most years, Mark's account is up between 30 and 80%, but week to week, month to month, it's up and down. Sometimes he has a losing streak that can last months. Sometimes he has a winning streak that can last months. But often it's a complete unpredictable mix of the two on a short-term period. So last year, for example, between September 2015 and April 2016, Mark was up over 3,000 pips. It was a hot streak. Then between May and August, lost about 800 pips and had a losing streak. So you need to be mentally tough enough to power through the losing streaks, because you always know that a win is around the corner. It's going to happen. And especially if you're able to eliminate trades. If you weren't able to eliminate trades, that little 800 pip loss will turn into a 3,000 pip loss, and you will be stuck where you got started. Now, many people don't have this mental toughness because they don't understand how difficult it is to actually go through drawdowns, and they crack as soon as the going gets tough. So if that's you, then that's fine, but this definitely isn't the right fit. So if you want help with your mental toughness, and you want to see how someone actually powers through difficult market chaos and either comes out with a profit or only a small loss, then this is actually right for you. Okay, now the fifth point I want to make is you might want all the work to be done for you. Okay, so the aim of the 12 months together here isn't for you to copy every single one of Mark's trades and just replicate his results. That's great, but that's not the aim of it. The aim is for you to learn the exact methods and techniques that Mark uses when he is trading, so that you can trade independently. That's the idea behind it. That's why you actually get a lifetime access to the Master Pattern Trader and the Pattern Trader Accelerator as a bonus to doing this, so that you don't ever have to rely on anything else other than this for your trading, and then eventually become independent. So Mark wants you to be able to make your own trades, apply what you've learned, and actually start growing your account. And then most people out there, not people in this group though, but maybe some people in this group, most people want the magic pill. And this is people that want to, this is actually for people who don't want a magic pill, who want to learn how to trade from a Wall Street veteran so they can go into the world and do it themselves. And it might take you longer than 12 months in terms of what you get in this program, and that's okay as well. So here's how it works. All right. For an entire year or more, Mark will send you his trades and analysis to your inbox every single day. Once per day, you'll spend 10 to 15 minutes reading the email and entering the trade so that you can instantly start growing your income with a proven formula. And that's how it works. Now, what I want you to do, if you get accepted to the elite program, what I want you to do is I want you to spend an hour before Mark sends the email to choose your own trade so you can really get used to looking at the charts and then matching them up with Mark's and seeing how you fit in. That is actually what we found one of the best ways for you to learn. Now, you are going to get the exact same system that is making hundreds of other people just like you money in the markets right now on a daily basis. So pricing, okay. Now, considering how much I paid, $25,000, this is a lot more valuable than that. This should be a $50,000 program, really, considering what other people charge for stuff. Because you get a lifetime master patent trader. I mean, just there, that's worth about 10 grand. Lifetime patent trader accelerator, right there, worth about 10 grand. And you get the patent trader elite for 1 year, which is in itself worth about 10 grand. But the cost of the program, the fee, the tuition for the program for the year is $5,000. However, we don't just accept anyone. You have to apply for a position and talk to me personally on the phone. And that's not a joke. You actually have to go through an interview process. It's about 20 minutes, and I'll make sure that you're actually prepared and understand what trading entails. So what we don't want is we don't want people just to jump on this impulsively. Like, I mean, you know the price already. It'll be easy for us just to put up an order form and say, right, okay, guys, here you go. Um, However, I need to get on the phone with you and I have to make sure that you understand everything that you are getting and you are a responsible trader. So we want to set you up to be responsible from the get-go. We don't want to be like every other program out there. We want to be something special. Now, there is a payment plan. If you can't afford the $5,000, there is a payment plan. So go to thepatenttrader.com/apply and fill out the application form. Take your time, but fill it out, and we'll get in touch, and then we'll set up a one-to-one call to have with you. Okay. Now, obviously, because of this cumbersome process of accepting people, we can only take on a small limited number, and I think the number that we talked about is between 5 and 10. So definitely go to thepatenttrader.com/and apply. There are a few questions there that you need to answer them, and then we'll get you set up with a call with me. Now, there's a huge bonus. Okay, in fact, you're going to get a couple of bonuses because it gets even better, of course. So, as well as lifetime access to the Master Patent Trader and the Patent Trader Accelerator, you get a one-to-one session with Mark. So, if you're accepted for the session, you guys will jump on the phone and you'll discuss the current markets, the trades, and any and all things that you want to talk about. You can talk to Mark about his tennis swing or how he's perfected his serve recently, which he's really proud of on the tennis court. But I would recommend what you do on this session is you pick out trades beforehand, and then when you get on the phone with Mark, you're going to say to him, hey, how about these trades? These are the ones I picked out. And Mark's going to say, no, this one's a trap. Don't take it because of this reason. I was going to go, yes, great. That's a really good one. Let's move on to the next one. And you guys can go through the markets like that, and you can spend an entire hour on the phone. And I know Mark actually really, really enjoys those sessions, don't you? So go to thepatenttrader.com/apply for that. And I know we need to get to your questions now, but we have a lot to get through here. Huge bonus number 2, trade with Mark in Florida. Okay, so if you're one of the first 10 to apply in the next 6 to 12 months, we're going to be doing an in-person trading event where you can sit side by side with other Patent Trader members and with Mark. So you guys are going to trade together literally for 2 days. This is going to be a fully immersive experience, which is going to, if you're at, let's say, level 55 out of 100 in trading, this is going to take you to level 85 out of 100 in trading. So that's what this is designed to do. So you fly out to Florida. We'll hire out a room. We'll get you bring your laptop. and we'll go ahead and we all trade together, and we get to communicate with everyone, and Mark's going to be there, and you are going to look at chart after chart after chart after chart, and then obviously have a little bit of fun as well. So in the next 6 to 12 months, we're actually organizing that event, and we're going to open up to a small number of people. I think probably like 25. So we have our current elite members who we're going to invite to that event, and then also the wider community as well. But it's not the tickets to that is not for sale. In fact, we might even fill it up before we even sell any tickets. So that is going to be something that is one of the most valuable things we've ever offered. And I don't think we've never had an in-person event like this before. So go to thepatenttrader.com/apply to get that. Right. Okay. So here's a recap. You get lifetime access to the Master Patent Trader, so that you will always be able to attend the weekly live trading sessions. You get lifetime access to the Patent Trader Advisory, so you can get Mark's weekly trades for life. You will get all of Mark's daily trades for an entire year. Bonus number one is you will get a personal coaching session with Mark, which is valued at least $3,000 or more. And bonus number two, you will get access to a 2-day in-person event to trade alongside Mark and other members in Florida. And this entire thing is available to you if you go to thepatenttrader.com/apply. We're going to read your application, then we're going to get on the phone with you and see if you can be one of the elite traders in this thing. Now, one of the things actually I just want to mention here, and I just want to circle this here, because what we want to do is we want to make this, because so many people charge so much money for stuff, right? In the Forex industry and things. I got absolutely screwed over with spending $25,000 on stuff. I spent $3,000 on a 2-day course, then I spent $5,000 on a coaching program, then I spent $12,000 on an additional boot camp and some other stuff, I can't even remember what it was called. It was like 2010. But I always had to spend more money. So what this is designed to do so that this is the time where you go ahead, you become an elite member, and if you decide to not renew your elite membership next year, that's totally okay, because you know what? You've got lifetime access to the Master Patent Trader. You get lifetime access to the Patent Trader Accelerator, so you're always taken care of. And so there's really no reason for you not to do this. I mean, if you've ever in your life bought a car, or if you spent money on university tuition, this is literally more important than any of that. And I say that with utter conviction. And you guys know that. I mean, we've got all these people on this webinar. You've seen all this stuff. In fact, you've taken some of the trades that Mark has been sending out to you. You've read his book. You know this is the real deal. But just these two things alone, I think it's already worth 10 grand. I just wanted to really get on that and say that I take my hat off to Mark that he's actually offering this at this level, because I wouldn't have done it. Simply because I think it's way more valuable, and I think his time is more valuable. But he loves he loves giving away so much stuff. So that's the recap. So go to thepatenttrader.com/apply now. Fill out the application form, and then we'll get started. If you can't afford the 5,000, we'll set up a payment plan for you. We've got a couple of payment plans in place. But it's always better to just do the full amount and get it done, because it actually works out cheaper. But yeah, go to thepatenttrader.com/apply, and let's go ahead. Why don't we go ahead and answer some questions? I'm gonna
Peter,
stop
can I
sharing my
just
screen here. Mhm. Mark, are you back? I
yeah,
lost you for a second.
can you
Yeah,
hear
yeah,
me?
yeah. I can hear you.
Okay, so I just want to say a couple of things. First off, Peter, thank you for that. Secondly, I think Ralph asked, he's participating in one portion of the bundle, and he asked if he wants to get on the elite, can he be credited back what he paid for the bundle? And the
Yes.
answer is absolutely. So if you have already paid for some other aspect of what I offer and would like to jump on the elite, which includes the master pattern trader and some of the things in the bundle, then we will absolutely credit what you've already paid. You won't have to pay that, and we'll just sign you up for the difference. So that's absolutely the case. I think I just want to also comment on what Peter said about the difficulty of this program. Actually, it's pretty easy. So this is the format. As I said, basically you'll get an email every
You're not
day.
sharing your screen now, Mark, just to let you know.
Okay. Sorry
Mhm.
about that. Sorry about that. So
No worries.
anyhow, this is I just wanted to pick up on what Peter said, about the difficulty of this program. And actually, it's pretty easy. It's pretty intuitive. I'll get into the difficult part in a moment. So again, this is an idea of what it looks like. So every day I send out an email around 5 p.m. Eastern Standard Time, sometimes a little later, etc., but around the time when the market closes, which is what I'm waiting for. I always include maybe some kind of overview, what I think is going on in the market. Then I also show you how to manage your trades. So here was a position that eventually made 258 pips. At this point, it was up to 104, and I just kept on lowering my take profit and my stop loss. So I show you exactly where I'm trailing it. And then again, this was the pound yen before it took off on a 652 pip romp. So if you'd received this email and you basically took this entry order and put it on your broker platform, you would have gotten in on a 652 pip winner, which, so when you put the cost of what this program is in perspective with one trade, you probably would have been able to offset most of the cost in just one day. And then, of course, this take profit was expanded 4 times before we got out 652 pips higher. So this is actually the email and the format. So it shows you what I'm looking at. So you learn while you earn, and that's the whole premise. It's no good just taking these things, putting it in, and watching this, and then if something happens to me, then you don't know what's going on. So I try and demonstrate exactly what I'm looking at on a technical basis, what the technical signals I'm looking at, what my insurance bars are, these key reversals, etc. And then I give you the exact entry point with the stop loss and take profit. So that part is pretty easy. Getting the email, putting it in there and putting the trade on, that part's pretty easy. The hard part is actually sitting in a trade. So most people just simply don't have, the discipline of what it takes to be a good trader, which, most people are sitting in front of a screen for 2 or 3 hours. They're looking to take 20 or 30 pips out of the market and have a pretty short-term trading mentality. So while it's great to see a trade that, in this case, made 474 pips on one trade. So this is the euro versus New Zealand dollar. I got in March 3rd and I got out 11 days later. So that's the hard part. Can you actually sit in a trade for 11 days, watch it go up and down against you, bounce around like a beach ball, knowing that eventually it's going to pay off? And so that's the discipline. That's the patience. That's the hard part. Getting the email and reading the instructions, is, not difficult. This is what another email looks like. This is, again, another, email format. So that's not the difficult part. The thing is holding the trade, having the discipline, etc. Also, as Peter indicated, there are many times where you'll get a drawdown where you can see 1, 2, 3, 4 trades in a row were losers. So now, can you accept that? Can you accept that it's just part and parcel of the process? Are you going to be flummoxed about it? Here's another 1, 2, 3, 4 out of 5 trades that are losers. So here was a month where I did 20 trades. And again, I'm not doing 20 trades a day. I'm doing 15 or 20 trades a month. So we're looking on a selective basis. And as we go in the summer, that 20 trades could become 8 trades or 10 trades. Again, I'm only looking for high probability trades, and I'm also looking to avoid the pitfalls. So here we have a recap. This was for the month of March. So March 2017, I made 1,097 pips for the month of March. So that's not a typo. A lot of you guys are trading and trying to get 10 or 15 or 20 pips out of a trade. Here is a month where I lost 50% of my trades. So here is a month where we took 20 trades and I lost 10 of them. Horrible. A lot of times people ask, what is your win-loss ratio? And if I tell them it's under 50%, they want to just go the other way. But I, often win 500 to 600 pips a month on average, and I lose most of my trades. So that's also the secret. But the thing is, can you accept losing 4 out of 5 trades and still hold on and know that eventually you will prevail? My whole strategy, my whole philosophy is that I simply want to capitalize on 2 or 3 big trades a month. So again, here was I made on gold and euro New Zealand. Here was another gold trade that I put on simultaneously. I shared with you my analysis. So I made 550 pips on gold and I made 474 pips on euro New Zealand, and the rest of them were backing and filling, losing and breaking even and on and on. So on only 2 trades in that particular month was I really a big winner. And it was really in the first part. And then for most of the rest of the month, you had to kind of settle with breaking even, losing, etc. And so that's the hard part. So before you sign up, make sure that this is something that you are willing to take on. And in my estimation, this is the only way to be successful. So you have to ask yourself, 95% of people in the market are losing money, and then you have to ask yourself, well, why is that? And I think because they're trading short-term charts, they're trading with lagging indicators that don't work, and they simply don't have a trade method that's designed to extract the big moves in the market. So by taking the bigger moves in the market, it enables me to overcome the losing trades and overcome the broker spread and all of that nonsense. So just on 2 or 3 trades, I'm able to come out with a winning uh, total at the end of the month. It's not exciting. You're not, watching the market action, but this is how I am consistently profitable. So at the end of the day, you really have to ask yourself why you're trading. What is your motivation? Are you in it for the bump, the rush, or the action? Or are you willing to take a disciplined approach that will get you where you need to go over the longer term? So again, this is my trade record for April. So that was March, 1,097 pips. Here's April, 1,100 pips. So in the last 2 months, these are all my daily trades, by the way. This is exactly the trades you received on this daily program. So we made 1,156 pips. So collectively over 2,000 pips just in the course of 2 months. So most traders trading right now would be happy to get that in 5 years. And this is what I made in the course of 2 months. So, Peter, why don't I hand it over to you at this juncture?
Yeah, sure thing, sure thing. Okay, yeah, Klaus says, Peter, I will come to Florida also. Yeah, Klaus is
Love to meet
another,
you, Klaus.
yeah, Klaus is another elite member, actually based in Germany. He's been having a good time. We chat on Skype every now and then. Um, So Wayne says, I'm confused with what's involved with your different programs, such as advisory, elite master. Okay, so basically they're just names, Wayne. So what you have is you have a weekly session, which is the master pattern trader session, which is basically a 2 hour live session with Mark, and that's called the Master Pattern Trader. So we just because we give stuff names, and so I can understand completely that there's so many names out there. So you have the Master Pattern Trader session, which is the 2 hour live session every single week on a Friday. Then you have a weekly trade, which comes out on a Sunday, where Mark sends out an email with trades for the week. Um, then with trades for the week. So that is called the accelerator. So that is accelerator. The advisory is a video which goes out every single week, which is the weekly video report. And together they're all called the bundle. So you can actually get a bundle of them all together, and they're all listed on the website. You can just go to the website, go to products, and it's listed them there. But I completely understand. There's so many different elements because Mark keeps providing additional value to people, and so basically, you get lifetime
Peter, I have
access.
on my screen an example of a Sunday email. So if
Okay.
you are, a part of the advisory, you get this overview. You also get my trading overview, which includes all of the markets, and then um, you also get this video report. So that's, if you're on the advisory. If you're on the accelerator, you get all of the weekly charts and daily charts. And if you're part of the elite, now you also get the daily trades every single day, which include exactly what I'm showing you here.
Yeah,
So
Sunday
that's
through to
really,
Thursday.
yeah, that's the just to clarify anything. So the elite is simply getting these emails every single day which alerts you to immediate opportunities like the pound yen where I made 652 pips. And it also, ramps up your learning. So you're getting a look at these charts, you're getting an insight to what I'm looking at every day and the setups. And so this accelerates your curve dramatically.
Yeah. Yeah, absolutely. Because the thing is, what happens is it's almost like an apprenticeship because you see it every single day and then you do it every single day and then you take those trades every single day. The only reason why we don't offer it just to everybody is because, as Mark said, it's really easy and simple to implement, but sticking with it and actually having the mentality to take trade after trade after trade and that consistency, that is not easy. And so we're looking for specific kinds of people that can actually execute that. But as a huge bonus to you, you get all the other programs that the pattern trader has to offer in terms of the master pattern trader weekly sessions, the weekly video reports, and the weekly trades. You get all of that for life. Um, all right. Okay. So, Craig, Mark, are the daily trades sent at the end of the day? Craig, they are sent between 5 p.m. and 8 p.m. Eastern Standard Time. Um, So is the accelerator both weekly and daily, or just weekly? Okay, yeah. No, so the accelerator is just weekly. So what Mark said in terms of daily, there are some daily trades that are taking on the daily chart. That's what the difference is there. So on a Sunday, there will be some trades on there that are taken on a daily chart, as opposed to just a weekly chart. Um, right, so Zot says, I got your letters, I the free book, but every time I clicked on the link was directed to the page that said the offer had already. I think that offer expired, Zot. I think that one might be what it is. Okay, so Elaine, what day of the week can I expect the weekly videos in the Pattern Trader bundle? This is the first full week of the Pattern Trader program, and I haven't received the video for this week yet. It comes out on a Sunday. If you have, Elaine, if you haven't received it for last Sunday, email support at thepatterntrader.com and they'll see what's going on there. And if you were signed up and you didn't get it, we'll extend your subscription by a week. Zlot. Yeah, there must be some kind of technical issue there, Zlot. We'll take a look at that. Okay. Um, Zolt, sorry. Right, okay. So, Robert, I subscribe to the weekly advisory and accelerator. What is the cost for the daily analysis? Robert, so the cost for being an elite member is $5,000, but $5,000 per year. But there is a payment plan in place, and for that you get lifetime access to the Master Pattern Trader, lifetime access to everything that's inside of the bundle. You get lifetime access to everything. Chris TV says, Mark, could you show us how to trail the stop loss, please?
Okay, so for instance, I keep on talking about the pound yen trade. So why don't we just, do something that we're familiar with? I'm just going to add a couple more days here so we can see what's going on. Actually, a little bit. No, this should be okay. So this was a trade I did actually right after the elections, and that's why I kind of remember it so well. So this is the pound versus yen. This is a daily chart. And so again, what I'm trying to do is evaluate the market. When I open up a chart, there's the first thing I want to say to myself, what is the phase or the condition of this market? Is this market going down? Is it going up? Is it trading sideways? Or is it in the process of turning? So when I was looking at the market around this time frame, the market was going straight down. It had actually come from a very high point. And until this point, it was a downtrend. So you want to use every tool in your toolbox to get short in a trend. If the market's going up, you want to follow it. So again, on the simplest basis, I'm just trying to get, in sync with what the market is telling me. I'm not trying to fight it. I'm trying to be objective and just do what and surrender to the will of the market. So when the market is going straight down like this, I want to get in sync. I want to obviously find ways to get short. And so I'm going to use my inside day bars right here and here. So that one inside day bar If you put a sell stop there, you could have taken out 600 pips the next day. I took out about 400 pips in about a couple of hours out of a huge move, out of just a little inside day bar like that. But again, I was going with the trend. Now at this juncture, I noticed that prices put on this little double bottom, and I was a little bit kind of put off because a double bottom typically is a, it's a wider thing. So a double bottom typically indicates a market that's going down, reaches a point of support, bounces off that support, comes down, retests it, and then when you look back, it looks like a W, pretty conventional thing. So when I saw something so close, I thought, my experience told me, okay, this may be something to watch. And then it kind of went straight sideways, and I wasn't interested, but I still thought we could have, reached a bottom there. And it was right here that I got really interested, where I saw that key reversal right in the area of this double bottom. The market made a new low, closed on the high, and I got long right there. And then I saw another market action that I didn't like, and I got out, and I made about 100 pips on that trade. But it was this particular trade, and I think I might have actually canceled out the email. I showed it to you earlier, but I must have terminated it by mistake. Right here on November 9th, this was the day after the elections where Donald Trump took everyone by surprise. The market went down and then closed at the high of the day on a 600 pip range. So because of the magnitude of the reversal coinciding with where the reversal occurred, so this double bottom area right here. So it was both the price pattern, double bottom, and the price action where the market reversed and closed on the high. I sent out an email that night to those on my elite list, the one list that we're talking to you about now, the program that we're talking to buy this market on a buy stop entry at 131.75 on that particular day. And I put my take profit, I remember, about 135 something, right there. So typically, and my stop loss was somewhere around here. So I basically put my stop loss in some neighborhood that's connected to where the previous day's close is. And then my take profit is somewhat arbitrary depending on how much I believe in the position, what's going on at the market at the time, how robust is the environment. But what I typically do is I like to see the market confirm what I'm looking at. So usually I'll put a take profit way outside what I think the daily range will be, just so I can see what the market behavior is. And you can see once my entry order was triggered right here at 131.75, the market just shot up and effectively confirming what I was looking at. So the day after, then I just kept on moving my take profit, and then the market just kept going up. So then I just want to, stay in the market for as long as it will have me. And it was right around here, started getting squishy, and I got out. I probably could have taken another 300-400 pips on the rest of the ride, but I got out. You can see it thereafter. It was a good way to get out. So the take profit and the stop loss are all predicated by the setup and the daily range. And again, on my daily emails, I instruct you very specifically on where to put your stop loss. So sometimes I'll tell you to close the position, and then I will, give you specific instructions again how to update your stop loss and take profit on this particular, email on these daily on this collection of daily trades. I was up 375 pips just in the first part of March on a collection of little trades like this, and then look to ride the trade depending on what it's telling me. So again, here's the daily trade analysis, and all the way back here, I was pointing out that the pound versus Canadian dollar had a double bottom. And again, the structure of the email is not only do I give you the technical pattern and I draw it specifically what I'm looking at on the chart so you can learn. So you can see the double bottom here. You can see the rounding bottom. Here I'm looking at some inside day bars, and then I show you an arrow exactly where I'm looking to buy it. Then you're actually instructed to take this trade and put this on your broker platform. In my email, I also tell you the suggested trade risk that you should put on the position. And then I give you a written analysis exactly of what I'm looking at. So in this part, I said pound CAD appears to have formed a long-term double bottom. Prices have recently formed a rounding bottom. Penetration above the past two trading inside day bars will likely result in further momentum to the upside. And let's take a quick look at pound CAD, and you can see that that early analysis turned out to be pretty prescient. So, here was the inside day bars, and this is what happened. And I'm actually long pound Canadian from a trade last night. So if you were on this list, you would have got an email last night, and this is the pound versus Canadian dollar. And again, I basically shared with you, here's my double bottom right here, this long-term double bottom. Here is in that email the rounding bottom that I was looking at. And then here was the connection of inside day bars, after which it took off. And then I put on another trade last night where basically here was an inside day bar where the market made a new low, closed at the high within the range of the other day. And so I basically put a buy stop here at 175.11, and we're almost at 176. So we're making 90 pips on that trade. So again, here was an email that went out all the way, I don't know when this was. This was the 5th of March, and here we are the 26th or 27th of April, and you can see that this turned out to be pretty prescient. These double bottoms, these patterns tell you what's going to happen over the long term. So here we are a month and a half later after this email went out, and it turned out to be pretty prescient. And it's not because I'm a genius. It's just I've learned how to spot these important turns in the market. So why don't I turn it over to you, Peter?
All right. Okay. Let's have a look at some more questions here. Okay. So, first of all, Chris TV said, and this was long ago. Like we haven't got to this question yet. Would you say a double bottom at the end of the wedge leaning to an uptrend? So, Chris TV, if you can just let us know which currency pair you were referring to, that would be a great help, because I know sometimes you put questions in as Mark is talking and we don't get to them till later. Darren says, if you go through these charts every day, would you not narrow down the pairs once a week and only need to look at a few? Says Darren.
Well, what I do is I go through my process every day and I do narrow it down to a few. So effectively, here are all the, where's my trades?
Chris says it's the first one we looked at.
So here are all of the instruments that I look at. I look at about 30 different instruments, mostly currency pairs, some global stock indexes, the oil market, where's the oil market? So here's oil, here's gold and silver and platinum and some other markets. So basically, I go through this process every day. At around 4 p.m., I start looking at how the markets are setting up, where they're looking to close. And like I said, I'm looking to eliminate all of these trades. And I'm trying to hone in on the one or two. Now, like I said, there are some days where I just take a pass, where I don't see anything that conforms to my risk reward criteria. And as I indicated, there are certain periods that are more selective than others that you need to be very careful of. And
So,
yeah.
yeah. So, Mark, if you go to GBP yen, that was Chris TV's what he
Okay,
was talking
so
about.
really what I don't want to do at this point is get into, kind of analysis of every single chart. What I'm trying to do and what I've tried to demonstrate is kind of my process here. And I think this is what
Mm.
we're trying to construe. So this is kind of, not an instructional on every current thing. So I'll take a look at pound yen real quick. But I
Actually,
just
yeah,
want
because I
to,
suppose tomorrow's Master Pattern Trader, isn't it? Where you guys spend 2 hours just going through
yeah.
this stuff. So,
So, again, this
yeah.
whole thing is not to design to, kind of see what's going on. I just want to impress on you what the process is and actually how it's actually more important to avoid certain trades than others. And that if you like what you see, you can get this on a daily basis, which reinforces your learning and gets you in on certain key opportunities. And that's, I think, what we're trying to convey in this particular platform today. So what was the a question again, Peter? And perhaps I can just answer it real quick.
It was about. Oh, hold on. Um, it was in the descending. Let me let me just try and find. Would you say a double bottom at the end of the wedge leading to the uptrend?
Yeah. So basically, that's
So,
kind of what occurred. So we had this wedge-looking thing, but then we also had these two price points right here. And when I looked at the weekly, I knew that even more this was a trap. So let me share with you what I was looking at on the weekly. And again, these bars They actually point in the direction they want to go. So all the way back here, sometimes, like a magician, the market tells you one thing and then it takes a set of time for it actually to happen. And this is kind of the discipline part and the patience. So this guy right here, this soldier, was telling you that there was a lot of support where the market made a new low and then closed at the high on a large range day. So guess what? When we revisited that neighborhood, that's when we saw the same behavior. So now on the weekly, you can see this double reversal, this double bottom right here, and these price reversals. So you have the pattern and now the reversal price action. And then this also showed me this was a busted pattern. So typically when I draw a pattern, and it should conform. So this is a descending wedge. And if this conformed to what a descending wedge, it should have done something like this. When it shot out the other way, this was a busted pattern and now indicating that the markets are going to go higher. And the same thing occurred on the example I shared with you in Australia and New Zealand, where we had that descending wedge, and instead of being a reversal, it turned out to be a continuation higher.
Okay. All right. So, Darren, if you go through these charts every day, would you not narrow down? I think you've answered Darren's question. Bernie, please can you show us how high a trade is likely to go in your opinion? So, Mark, how do you decide? So for GBP NZD, when it was down in the 170 range, you said this thing is going to go to 185 to 195, possibly two. How do you come up with that?
Okay, well, basically a pattern. Holy moly, this thing is just smoking. And this is no surprise. I was saying months ago, I was saying right here, back in October, and we've got all the emails, the videos. Peter has been just so sick of me making a video every week about Pound New Zealand, screaming from the rafters that this thing was going to be a monster trade. And it took some time. Again, this put on a reversal here, and it took this course of time before we got this trade action. But again, when I see a pattern, by definition, when you see a pattern that is a double bottom, with the word bottom in it, it can only do what? It can only go higher. And frankly, the neckline of this thing, even though it double bottomed at about the 167, 170 area, the neckline wasn't until 180. So it was only until last week that we cracked this whole thing and confirmed it. So we've just confirmed this thing. It's just getting started. This thing is going here. Now, people just, when I do that, people just think I'm out of my mind. But that's what the double bottom with the word bottom in it tells me. This was a double top right here. And when it cracked this neckline at 225, it went to 165. So that's what? My math is horrible. That's a $60,000 move for every $1,000 you bet once it cracked this neckline. So that's what these patterns, tell you. They tell you that, that when something's turning, it's turning. So when something's turning from a bear trend and puts on a reversal pattern, it means it's going the other way. Now, the trick is sometimes it'll crack through the neckline, and very possibly it's going to retest the neckline and come back here. And then maybe play around through the summer and give us some misdirection before it goes.
Perfect. All right. See you later, Chris. He says he's got to go. They're about to shut up the office for the night. That makes a lot of sense actually, and hopefully you guys understand that just because it's broken that neckline doesn't mean it's going to go straight up. It's going to build away and then continue upwards.
And
Chris says,
frankly,
yeah,
even
yes.
sometimes
Just
sometimes
so 1 second, Mark.
yeah.
I just have to address this because Chris asked me about a broker. I put a reply in about a broker to you, Chris. Chris, the glider pilot from the UK. Yes, the private message in Dropbox was for you. So there is specific brokers, but the thing is, we don't like recommending brokers because we can't like 100% vouch for them. But you got my response there, and hopefully that helps. Okay, go ahead, Mark.
No, I think that's about it for me. So I
Okay.
think really what I'm trying to impress on you guys is that I've been doing this for a while. I consider I'm fairly adept at it. Even though we had a couple losing months last month, and again, you also have to prove, know that when you sign up, there could be losing days, there could be losing weeks, there could be losing months. But over the course of last year, I was enormously profitable. Over the course of this year already, just in the first quarter, you can see we made over 2,000 pips on my daily trades in March and April. Uh, but there is, periods of time where, you have to brace yourself that trees don't grow to the sky. And any product that tells you you're going to make profits every day, every week, every month, even though I've been able to do that pretty good, is not going to be the case. So, go in with realistic expectations. And again, what I'm trying to do is liberate you from a lot of the nonsense out there, and show you that the market tells you the important things ahead of time. These price, so all the way back here, in January. I didn't know Theresa May was going to call for special elections. I didn't know what the outcome of the French elections were going to be. And by the time you hear it on CNBC or the BBC or whatever, the big money's already in there. So I was already getting in there. I was already alerting all my members on my daily email list. We're getting in at the 170, 173, 175 price level. Yoni, are you on here? There's a fellow Yoni Shane from Israel who's been really disciplined about following my trades and has been in riding this pound New Zealand like Zorro. Yoni, if you're in, maybe you can show up and just say a word. But that's basically what it takes, and that's the benefit of this. So hopefully you see it. I don't want to drone on too much more, Peter.
Okay.
This is not
Yeah.
really designed to be a sales presentation.
Yeah.
I think the
So
performance should really speak for itself.
yeah. Okay, guys. So go to the patterntrader.com/apply if you haven't already, and really think about your application and complete it. Right. Okay. So I'm just going to race through some of these questions. We've been on here for about an hour and 40 minutes. Guys, we do have a master pattern trader session tomorrow. So so in terms of charts and trades and stuff, we're going to leave that out for now. Um, Angela, is copper going up or down? No, Mark, you don't really trade copper, right?
Well, I do, but again, this is not a session to
Okay.
comment on the markets at this point.
Okay, so Cam, what does Mark use for the close? GMT or New York close? It's the New York close. Oh, GMT close, 24-hour close, right?
Yeah.
Yep. Um, what do you call a key reversal when there are several other colored bars from sold?
So
A
key
key
reversal is
reversal, yeah,
simply
sorry.
noticing how a market closes relative to its high and low. And it doesn't have to be red or blue. Sometimes it can be red in a market that was reversed higher. But it's just again, but it's at a key juncture. You don't just trade every key reversal or inside day bar. It's within the context of a trend or in context within an established pattern. So you can't just
Yeah,
shoot it all.
yeah. So why don't you email support at thepatterntrader.com and ask them if you can go ahead and buy Mark's book because it has everything detailed in there, very very detailed. I know you said that the offer there is expired for you, and also just address that as well with them. Um, okay, John, I was not stopped out on NZD USD and now showing a nice profit. Is your original take profit of 67.87 still valid? Yes, I would
on
assume so, right?
which pair now? Pound New
Uh,
Zealand,
yep. New Zealand dollar.
New
It
Zealand
was
dollar. Yeah,
it
no,
was
I
from a
think
while ago.
yeah, it's going to go lower.
Okay.
And this pound New Zealand looks like it's taken off, but it's just getting started.
Yeah. Do you have any position calculation for commodities? So gold and oil. So risk management calculator for that.
The risk management calculator I use should have um, it has it for gold. I know that for sure.
Mhm. Okay.
XAU USD, that's spot gold, just to make the distinction, not a
Okay.
commodity. Yeah.
All right. Okay. Then let's go through here. Okay, Craig, do you consider close above the 75% of the range to be a close on the high?
Probably in the last quarter of the bar,
Yeah.
that would be about right.
Okay. Bogdan, hello, Mark. How do you think that in the current condition, French election and ECB interest rates, the euro pairs will evolve, and also how USD will evolve relative to Trump's decision to reduce tax rates for the summer period? Is better to focus on exotic pairs rather than major pairs? Question mark.
Well, that's what this whole program is about, is getting you in on trades that, are selective and designed, to capitalize on opportunities and keep you out of certain opportunities that, are not working. So I don't trade markets that, this is what uh, the um, the danger of a summer market looks like. So if markets go like this, very difficult to make money, and this is actually where you get cleaned out. And this is what a lot of pairs will look like in June through September. So this is the whole point, is that there's a treacherous market environment upcoming, and so you want to focus on trading opportunities that don't look like this. And this is what part of the elite program is all about. Now, in your question, you alluded to a lot of news events and things of this nature. My whole philosophy and my trading methodology is predicated on observation of price action and price patterns, which in my mind precede these news events and whatnot. So they build, and the markets are a discounting force, meaning that whatever's happening in the markets now are taking into account events that may happen 2 weeks from now, 2 months from now, or even 2 years from now. So right here, when I was getting involved in the pound New Zealand, again, I didn't know about the French elections or the outcome. I didn't know about, Donald Trump winning the election. None of this was apparent. But in the infinite wisdom of the markets, they start indicating and pointing you in the direction where they eventually want to go. And then, when we see, something on the CNBC, this is, you can say, okay, this is why the pound New Zealand went up, because, something happened in the French election or Theresa May said something, but it was already baked in the cake way back here in October, November. So, the news is just for, cocktail party conversation. It's not really pertinent to trading.
I like that. I'm going to coin that, I think. Thanks, Darren. Thanks, Ryan. Thanks, Marvin. Um, thanks, Alt, Frosto, and Andrew. Um, Chris, thank you guys so much. They're all saying goodbye. So go to thepatterntrader.com/apply, guys, if you haven't yet. Some more question, Robert. Do you add to positions?
I do. I
Yes.
absolutely do. I've been adding to pound New Zealand. I showed you the gold trade that I added to. Let me just. So you can see here is the pound New Zealand. I had a trade in on March 6th at 175. I added on April 3rd at 179, and now it's 188.
All right. So Bijal says, how should take profit and stop loss be set in potential trade? Bijal, just
That's what we show you in the emails.
yeah,
When I
yeah, yeah,
send you
yeah,
out an
yeah.
email,
Just
that's here's actually where the stop loss is. I tell you where to put it, where to put the take profit, and that's exactly what, and here's how I show you to put your stop loss and take profit on any trades that are open coming into the next day. So everything is laid out very, very specific. There's no guesswork. The real discipline and patience is, staying in these trades, watching a trade that's up 172 pips and being, really excited about it and wanting to take that thing and staying in for the next day because it might be up 372 or 772 pips. So that's really the discipline.
okay. So Tim says, do you have a limit on how many trades you have on the table at any one time? So how
So, like I
open
said,
positions?
I'm really looking to eliminate most of the trades. I'm not looking to, trade for excitement. So, typically at any one time, I usually have one or two trades going into the thing, and then, you can see if I've got some open positions, that's also going to curtail the number of trades. So, I've got 4 open positions here. I actually closed one, so 3. So, coming into that day, I had one and just one trade for the daily trade setup. So it's usually one or two trades a day, and then many times none. Sometimes the best trade is sitting on your hands. So that's part. Like I said, unless I can see a 3-to-1 risk reward, I don't take that trade.
Okay, so Gary says, what size account will we need to take a full lot on your average trade?
So a lot of people, trade backwards. They equate the number of pips to risk. So a lot of people are risking, like 5 or 10 or 15 pips on a trade because they want to trade a certain lot size. So they want to trade a half a lot or a full lot. So based on trading that big a quantity, then they narrow down the number of pips they can risk, obviously, so they don't get wiped out. And it's kind of backwards, so that you should think about in terms of what the market needs in order to room to move. You can see, like, let me look at this particular trade. My entry was 164.59, and my stop loss was 62 pips below that. So obviously, if you're trading with one lot, you're going to risk $600 on that trade. So it really depends on how big your account is. And then I typically recommend that you only trade with 0.5% risk on most trades. Sometimes you can go to 1.5%. And that's going to dictate how much risk you can take or how big a lot size. So that's kind of something for a discussion for another day. But it's a function of how much risk you're willing to take on a trade and how big your trading account is as to how big a lot size you should be trading. But you shouldn't just say you have a default that I want to trade a half a lot or one lot, because that probably inevitably is too big for your account size. And that's why most people lose. They're taking too big a risk per trade, but that's probably a discussion for another day.
Okay, all right. So let's have a look at a few more questions here. Anthony says, notice sometimes the market will spike to stop loss and almost as if to trigger on purposely broker markup triggers. Do you get back in if it drops below/above your stop loss again?
Yes. So if the trade's still valid, then I just wait for my next, insurance day bar, and then I'll get back in the trade.
Okay, so Murray says, I'm in both GBP NZD and Euro NZD at the moment, simulated only, unfortunately. Anyway, I'm curious to know why the outlook on GBP NZD is bullish, but Euro NZD is apparently bearish now, not considering all the Euro news events, I mean. Murray, that's probably best left for the master pattern trader session tomorrow.
Well, but he's probably looking to some fundamentals. I don't know that it's, I don't know, one is bullish and one is bearish, and maybe, he's read some news event. And again, I don't follow, pundits. I don't follow the news, and so I'm bullish on both those pairs. So that's.
Okay, all right. So, David, hi Mark. Do you adjust your stops to break even after they've gone your way?
I don't adjust them to some, a kind of an arbitrary figure, that's in my account. The market doesn't know or care about what's in your account. So many times we move a stop loss to a certain price point, because we want to make a certain profit or we want to protect. The market doesn't know what's in your account. And so you have to put your stop losses at a point where it makes sense in the market. So if you're looking to capture a big move, if you put your stop loss too close, you could be prematurely jerked out. And again, this is part of the discipline, putting your stop loss wide enough, giving it enough room. And this is the hard part. So this is the guidance that you get in this program where your stop loss is. So I got into this thing at a price of 176.90, and my stop loss was almost 200 pips away. But in the end, I made over 500 pips. This 356 pips is only prorated from in April. I got in this thing in March, so several hundred pips occurred in March. So I actually made from 177 to 182, so 554 pips in one pair. But you can see my stop loss was way away from where I wanted to get in because I didn't want to get prematurely jerked out. So the stop loss is it's a bit of an art. It's not a science, but you want to not take a big risk, but you don't also want to get prematurely jerked out of a trade, and that's kind of the fine balance that you have to play in the markets.
Okay, all right. So Let's
All
see,
right, Peter. I
Gary.
think I'm getting a little fatigued here. I think we've kind of made the point, and those who get it, hopefully will be on board soon, and look forward to again, Peter said we're just holding it open to a select few people. We try and make this a boutique product. This is an institutional product. I really didn't want to make this widely available to the public for certain reasons, and so hopefully those few who see the value, I look forward to seeing you on board pretty soon.
Yeah, thank you so much, guys. There's literally only one question left, so I thought we could answer it, and
Okay,
it's an easy
perfect.
one. Gary says, "I understand about risk. I'm asking, what is your average risk, so that I know how large of an account to have to risk 0.5 to 1%." Mark's average risk is 0.5% to 0.75% on a trade, Gary. So there we go.
And that's
All right.
actually part of the pattern trader email. So I give you that guidance. I actually tell you based on my outlook for the trade how much to bet on that trade. And sometimes I'll move it up to 1%, sometimes 1.25. I remember on the pound New Zealand, I said, I really like this thing. Go up to a point, 1.25, and then I actually added to my position. So here it is. Here actually is this trade and on the pound New Zealand all the way back in the March 5th, at 175.09. And this is where I suggested a higher trade risk profile. I said, so I basically talked about the double bottom, gaining traction, the key reversal. And I said, if we take out the high of last week's key reversal bar, my confidence is very high on this trade heading higher. So that was all the way back on March 5th.
All right. Okay. Thank you so much, guys. Really, really appreciate it. Now, go to thepatterntrader.com/apply to get involved. If you can't afford the $5,000, no worries. We'll give you a payment plan. We'll put a payment plan in place for you. So, thank you so much for attending, and we'll see you real soon.
Thanks, Peter, and thanks everyone for attending, and look forward to seeing most of you back tomorrow. All right, take care.